Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. What a day on Wall Street. Markets opening sharply lower after some nasty overnight panic in the markets due to tariffs and the concern over this Liberation Day and how many blanket tariffs are going to be put out across the board on different countries. Ultimately, I said this morning in the game plan. I said, buy the panic. All right, and listen, not for a long-term investment. You guys know I don't do that stuff. Short-term trades, buy into fear and panic at key technical analysis levels. Sure enough, what did the markets do today? They rallied beautifully higher. Let's take a look. Look at the S&P 500 here. How awesome is this? The markets today, we opened just above this trend line. Remember this trend line right here, guys, because this is going to be something I want to refer to in just a minute. We opened just above it. They flushed it out. That's getting the weak hands out of the market, taking it, running stops. All right, remember that. Running stops, essentially stopping people out that were panicking below that line. And then look, we got back above it, retraced into it, held, and then it was off to the races the rest of the day. SPY right now trading just off the highs of the day. Now, listen, this rally may not last. In fact, eventually, I still think we're going lower. But remember, a good swing trader can buy these levels and make 5, 10, 15% in a matter of days or weeks if they find the right levels in this type of volatility market, right? In this type of volatile market. So flipping back to the markets here again, as we enter the close and we flip over to the daily chart. So remember this line here. Let's flip that over. This is that line, the pivot low from March 13th. So sure enough, we opened just above it. They ran the stops by flushing it below. And again, that's very common where panic flushes it out, or the institutions flush it below, knowing that a lot of people have put stops right at a break of this low pivot, because the idea from most people is that if it breaks that, it's going to flush even more. In reality, oftentimes they'll pierce it and then they'll rally it back and kind of get people out of their long positions and then take it all the way to the upside. Now, basically, what do we have here? We have an S&P level right here and an S&P level right here. So we're essentially range bound between these two lines. And that's now what I'm focusing on. I'm going to see, do we go back up to this level? Do we attack this level? Or do we stall out and come back down? Now, if you get a daily close below here with confirmation, okay, game on for further downside. Short-term support would be right here at around 540 on the SPY. That's 5,400 approximately on the S&P 500. And then eventually, I still think we're going to tag the August lows later this year, probably within the next few months. So again, I always like to be crystal clear on this, is that I myself am a day trader and a swing trader. So I'm playing short-term moves in the market off major technical support. What was I doing this morning? Well, in the game plan this morning, if you tuned in, I went over charts that were very close to technical support. And sure enough, I started buying a lot of those charts this morning with members of Smart Money stocks and ETFs. Sure enough, most of them are very nicely in the money later today. But these are short-term trades. If you ask me short term, I might be, as of today, the morning open down, I was bullish. I said, all right, buy the levels, buy the fear, buy the panic. But after a few days of rally, I'm going to cut the ripcord, pull the ripcord, because I still think this market is going lower. Now, we're going to find out what this Liberation Day is in terms of tariffs, probably tomorrow or on Wednesday, what the details, the market craves details. From there, we're going to look at the jobs report later this week. That's going to be huge in terms of telling us how good the economy is, or frankly, how bad the economy is. NASDAQ 100, look at this. This one gapped below significantly, and it still rallied and recaptured the technical low from the date right here of March 13th. Now, again, notice how this one opened below this line. That tells us that the NASDAQ has been weaker because it actually opened below versus the SPY opened right on or above and then briefly went below before rallying to the upside. The dollar today, only a little bit of an uptick on the US dollar, still hovering here. We had this great head and shoulders pattern that played out beautifully down here. Technical support, you expect to bounce. But again, whether or not we go up and test this line, which I still think is possible, I still think the US dollar is going to eventually break lower and kind of come all the way down towards this support at around 100 on the DXY. The 10-year yield, you got to see this, guys. The 10-year yield was down today. Look at what I drew in over the last couple of weeks, this head and shoulders. This shoulder is now forming. We have not triggered the head and shoulders yet. That would be at a break of 4.14% on the 10-year. All right, once that happens, once you have a daily close below there, we can then go and say, okay, well, what's our downside target of this head and shoulders? Remember, head and shoulders patterns are bearish if you're new to technical analysis. To find the target of the head and shoulders, you take the highest point of the head, drop a line straight down to what's called the neckline right here. You take that line, and wherever we break, you map that out to the downside, which brings us right down to just below 3.5%. I would say, again, if we break this line here, eventually within probably 4 to 6 weeks, I think we could see this level. Now, the only way we're getting down there, remember this, the only way we're getting down there is if the economy really starts to struggle. Because if the economy stays neutral to okay and stays relatively strong, then inflation's not coming down. Usually inflation is pulled down by weaker consumer spending, which we're already seeing. But because of tariffs, inflation may still creep up a little bit. But if we got weak enough growth, inflation would probably come in, and therefore yields could come in. The 10-year yield could come down. So it really tells us that if this triggers, if this head and shoulders triggers, right, what does it mean? It means the economy is not doing well, because yields then would have to come down. Looking at NVIDIA today, guys, NVIDIA actually staged a remarkable rally off of its lows. In fact, look at this, guys. By the end of the day, again, it rallied all the way up to basically close around 108.75. That's an incredible recovery. Now, it is coming back in after hours a little bit, but still, that is an amazing rally off of the lows. And again, if we go to the daily chart, you flushed and took out the low here intraday, took those stops out, and then rallied back. We'll see where it goes in the coming days. But to me, the biggest thing on this chart is this trend line, right? You hit it once, twice, 3 times, 4 times, bounced, broke, retraced. Remember, support, 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 and support now becomes resistance. It's rejected and price came down, although it did bounce today in that area. AVGO was one of my favorites I talked about, guys. Great recovery on this one. Take a look at that. Again, getting back to about 168, still negative on the day. Now, one of the reasons why the semis were so weak today is because there's more and more analysis being done that this DeepSeek could very well lower the cost significantly by 95% of essentially AI and deploying AI in data centers. Now, listen, it means a lot more people are going to want data centers and so forth because it's a lot cheaper. So that could be good for the semiconductor plays, but it also means people don't have to buy these, $10,000, $100,000 chips that NVIDIA and some of these other players are hawking, right? So again, it's kind of like a double-edged sword, but I still think it's a matter, for me, it's a matter of charts. I frankly couldn't care about the cost of entry or this. It's what is the chart telling us? And if we go back to the chart, we can see again, look at this. I mean, just using logic, and I'm a big fan of logic, you guys know, a week ago, Broadcom traded at 197. Today it bottomed out 18% lower. That's basically in 1 week, 18% on a formerly trillion-dollar company. I think we can all agree 1, 2, 3, 4, 5, 6 due for a bounce, and that's what you're getting. I think this trades back up to this pivot low in the coming days, maybe the next week, and that looks like upside to about 179. Notice I'm using the former pivot as my now resistance. So this bounced here. Now it broke. This will be your resistance level. Not to say it can't get through there, but that's going to be your first technical level. Now look at this one. This is one I picked up with smart money stocks and ETFs. This was a beautiful gap fill on Alphabet/Google. And look at the drop, about a 30% drop into a major technical level with a 3-bar surge. That ends the move on heavy volume. Boom, there's your bounce. There's your potential low. We got in just below 151, closing at 154.55. Congrats if you're a member of Smart Money Stocks and ETFs. Palantir opens right into this trend line, pivot low to pivot low right here. Bounces. Now, eventually, I think Palantir breaks down, but we can use this secondary parallel as our next target. So where would Palantir go if it breaks this yellow line? It would go to this orange line at around $73 to $73.50. That would be a great little area there. All right, flipping over to Bitcoin now, folks. Bitcoin, again, basically flat on the day here. Markets did rally back, but again, you're still seeing a struggle in Bitcoin land. We have this down sloping trend line right here. That was the major barrier to upside right over here. We saw it break down. Again, resistance is going to remain right here around 86,000 to 85,500. If that breaks, 92,000. But right now, path of least resistance to me is still 74,000 or just below. So I'm still looking for a flush in the next couple of weeks down into that level before it finds a level of support or major support. Gold continued to rally today. Look at that move. Impressive. Very rarely, remember, probabilities dictate, right? So you look at this line, about a 70 to 80% chance of a pullback, it does it. 70, 80% chance of a pullback, it does it. Here you get a very small pullback, and then it pushes up. So in this case, the 20% to 30% probability won out, and we went above this level. Now, generally, and I'm speaking in probabilities again, when you break above a parallel, an upsloping parallel, you might go a little higher, but eventually pressure sucks it back in that range. So just be aware that even though it's going higher here, it may reverse at some point. I would expect that. Probability dictates that. And eventually we come in after this impressive 3-day move. 1 day, 2 day, 3-day move on gold. Silver today, I don't even know why I bother bringing it up. I know a lot of you guys love it, but it's just not doing anything, frankly. It's stuck below $35 an ounce, and it's still holding technical support right down here. And then oil today, guys, this was a big one. This was a big move in oil. Oil popping, more threats from Trump on maybe even increasing tariffs on Russian oil, and some OPEC news as well, popping oil up when it was right here. So it pierced this area. I let it squeeze, run the stops, and then I pulled the trigger on a short on oil, a starter position right up here above 71.5. And again, I'm looking for a retrace and pullback back into this zone and eventually a breakdown. So I finally pulled the trigger on a little short in oil, excuse me, and I'll keep you guys posted. Here we have natural gas, which was up a little bit on the day. Again, you have your pattern, hit support. You're getting your bounce. Retrace here would be the scene of the crime. This would be a great level for a potential short if it can get back to about 454 to 455. And then I would expect a rollover again in natural gas. All right, guys. So listen, crazy markets lately, right? Crazy markets. We have a scenario here where tariffs are a concern, inflation's a concern, the economy's a concern, and now we have the jobs report on Friday. And guess what? We're just about to enter April, and by the mid-April period, we're going to start getting tech earnings, bank earnings, and it's going to be earnings galore season. So there is a lot coming up here, which again, for me, and I said this to my traders today, I even said it in the game plan this morning to you guys, is that when fear and panic, when volatility grips the markets and we see these wild swings in stocks, what does that mean? Opportunity. You just have to know how to read the charts. But probability, using logic and probability, can put you in a position to maximize some impressive gains. This is my favorite market to trade. We crushed it in the live day trading room today. I think we had like 30,000 in profit. Incredible day. But the point being is volatility gives us opportunity. Remember that. Don't let fear overtake you. When you saw the markets this morning, don't get fearful. Don't panic. Don't result or let those emotions take hold. Look at the charts. The charts will calm you down. Sometimes it'll say, get the heck out. Other times it'll say, buy. Buy like crazy, like this morning on some of these names. All right, guys, I'm going to step aside. Thank you so much for tuning in to Trading the Close. You guys have a good one. And of course, I'll be back tomorrow at 9 a.m. for the game plan. Take care.